Hello everyone who is watching this video. It's just a short breakdown of the price action that you saw on my Instagram, and I hope it will be valuable for you. I'm planning to share a lot of free value like this in future, but in exchange, I'll just ask you guys to share this to Instagram page. So yeah, it's my only motivation right now, and I really appreciate your support. So I'm not gonna break down the whole context on higher time frame why we are bearish from this level. But as you can see, it's just some, random liquidity point. It's not important. That's not the that's not the point of this video. The point of this video is liquidity, right? We want to understand how to identify liquidity, what kind of liquidity is important, what is not. So I'm just gonna create a scenario that didn't really happen, but to make it easier for you, imagine this is a high time frame liquidity level. Okay. So what does it mean for us? Well, it means that we want to trade from this level, right? We want to change our bias from this level. So let's say the whole time we had some reversal pattern here. We want to buy. We make higher highs, higher lows, higher highs. The moment we touch into this level, this high time frame level, we want to either pause our bias or we want to switch our bias, right? So I'm gonna move it a bit here. So in my case, I switched my bias. This is 28th of January, and we are looking for a reversal. So the whole time here, we are looking for mitigations from demands to buy. The moment we turn bearish, these demands will become traps. These POIs will become traps. And smart money guys will still keep buying here, right? People will see this break of structure, this major break of structure on high time frame. Oh, I'm gonna make it black for you. And what do they see? Oh, there's this demand, all right, or this decisional. There's this stop hand right here. It's up equal lows right here. So I'm gonna mark a POI here. But because we tapped into this level, or we will tap into this level, it doesn't matter. The flow changes and we turn bearish, meaning this POI will become a trap. So this is what I call a context trap. And yeah, as the name suggests, it's just based on context. So bearish flow, and now we are looking for sells, right? Before every reversal trade I take, as you can see on my page, I always look for what we call early buyers or early sellers, right? I don't care if if we make equal highs like this and then we take the equal highs. No, it's not important for me. But what's important for me is I can see that other strategies or other people are seeing a signal, are seeing an early signal for a reversal. So if you look into this price action, you notice that there's this beautiful three-touch trend line. One tap, two tap, three tap, right? Perfect. Every tap, it broke up. And finally, we see a nice breakout on the trend line, giving us first sell signals. What else? Smart money people will see this as a break of structure, right? And they will try to create a POI. Let's say this extreme POI or a flip zone. So that's how I came to this second trap. And this is what we call a fake break of structure down. There is also a scenario where price could just melt. In that case, nothing happens. I miss a trade and I wait for the next one. That's completely fine, right? But we should always wait for liquidity. So all the people that are selling here on the breakout, all the people that are selling on this breakout, on the break of structure, and people who have a sell limit here all have one thing in common, and that's a stop loss right above here. So I'm just gonna mark it red, with red, and I'll put an X there, right? So we have liquidity for, so price keeps breaking down. Maybe it reacts to a trap. Nope, it doesn't. But we sweep the liquidity and we give a bearish candle. As you can see, this is also in our timing. This would be like a New York Open. So, there's an opportunity for a sell here, 100%. But at the beginning, you should not care about trades. You should care about understanding the key concepts, right? So I'm not gonna bother with trades. and we continue. So we sub liquidity, we continue down, bam. So we have this big momentum push to the downside, and what you can also see, a break of structure. I'm just gonna mark it black. The break of structure would be here, the bottom, or also a breakout, right? And what you see, price comes back exactly to that level right here, right? It broke and retested. So this is a retail pattern called break and retest. And what it means for us in future is this high is created in a very bad pricing. Break and retest. And that's why we should see this as liquidity, right? But we'll wait a bit to see what's happening. So as you can see, price keeps breaking down 1, 2, 3, right? We keep having breakouts to the downside. And all the stop losses are resting above these highs right here, right? So the breakout would be right here, right here, right here. You have to be patient. We're not, for example, in these days, this day, for example, I wouldn't trade. I would wait for price to take or create liquidity. And what happens? Let's see. Okay, it goes up a bit. It creates perfect equal highs. Now you can see why these equal highs don't matter to me, that I'll still wait for this. Just because it's a break and retest, this also becomes our trap. So our trap for smart money guys, right? They'll see, oh, we broke structure here. We have this beautiful break of structure. You have these equal highs above, right? And they'll try to put a limit here on the PY, let's say. But because we can identify liquidity, we can easily avoid this loss. You tap into a trap. So generally, when price taps into a trap, it gives a wrong reaction, a false reaction for people to take a trade. So here you see it gave you a mini break of structure here. And what this means also, it means that people are getting in buys and their stop losses are right here, right? If you want to do something subjective, we can also add like a trend line to see. See, okay, so price reacted to the trend line, it sold to the downside, and then finally you have this beautiful break of structure to the upside, or you can even call this a breakout, it doesn't matter. So you have both internal and external break of structure. The internal would be this one. And now you can imagine how many strategies are lining up here, right? They are lining up on these lows. You have this trend line breakout right here. You have this range breakout. You have a smart money choke here, right? A lower high, lower low, higher high, and everyone is buying. And what is this lining up with our break and retest liquidity? We swept that. Also, it's 3 p.m. Central European time, so it's our timing. Oh, I should go to full screen like this. Okay, so that's again a possible trade. We'll move on. So we swept the liquidity, and now we have to think, is this important? Is any level lining up with the liquidity? Not really, right? There's nothing here, like we have just equal lows here that we should target in future. So even though we swept liquidity and the liquidity is relevant or important, right? People get a signal, people do buy here. I'm not gonna buy, right? We are in a bearish flow. So we can play a bit more. This liquidity sweep also becomes a breakout to the downside. So I'm just gonna change the color. And of course, we have another breakout right here. And where's the liquidity? Right above this. What you can also see is this push right here, big momentum push. So I guess a lot of internal guys would enter here. And that's also, a possible flip zone, let's say. We gave a reaction, we broke to the downside. And that's, ladies and gentlemen, another trap. This one would be really hard to identify in a real market conditions. So usually I would still try to take a trade here and wait for my confirmation. But of course, if price manages to go higher and takes this one, then of course you still wait for a confirmation and still get your entry model, right? And that's all. That's a simple, very simple breakdown of this price action. I hope it was helpful. I hope it's not too complicated. And yeah, see you guys in the next video.